Ladies and gentlemen, I understand your struggle. You are feverishly looking at trading videos one after another, hoping to find the quick fix to your trading woes. You desperately want consistent results, perhaps more badly than you've ever wanted anything before. And that's a good start. If you want to be successful at trading really badly, wanting it more than anything is a great attitude to have. However, wanting it badly is on its own not enough to stop you from losing, as you're probably finding out for yourself. Now, to turn yourself from a losing trader to a winning trader, you need to go deeper on the charts, looking at your exact approach and comparing it to what professional day traders at big banks and institutions are doing, because those are the most consistent traders in the world. And given my background in those very institutions, I'm perfectly placed to do that with you today in this video by breaking down a live trade I took just this week, and we're going to do that together. And whilst we do that, I want you to compare what institutional traders like myself are doing to what you're currently doing, and seriously ask yourself if the reason you are losing in this business is simply down to you looking at completely the wrong things. Important video, so let's get into this. Okay, so as discussed in the intro, we will be looking at a live trade on my live account, as you can see here. We're going to break all this down in detail so you can actually see what you came here to see. Obviously, some live trading and seeing how you might be able to apply this in your own trading. Straight away, you'll be able to see it's very different to what you might be used to seeing. It's an institutional, professional analysis, something that everyone should be doing. Before I do that, a lot of people obviously get onto their chart straight away and start hitting buying and selling. And I'm here to show you that that's probably one of the reasons why you may be failing at this, okay? Because a lot of work needs to be done in the background. This is professional trading, and it will be wrong of me not to show you that because I am showing you a professional style of trading. So let's get into that. So you're going to see, and like I said before, compare to what I'm doing here to what you're currently doing, and that may help you see why you're currently losing in this business. No reason why you can't be winning, but obviously you need to start applying some deeper analysis, as again I said at the start. So number one is sentiment. You'll have to forgive my poor handwriting, but are you really thinking about the sentiment of the market before you start trading? Are you thinking before you even kind of think about buying and selling? How's the market positioned over the last few days? Various different ways of doing that. Obviously, fundamentals is one, as you've seen me talk about a lot in my institutional Sundays. This week we had CPI. Really heavy focus on the inflation number, and it's important to make a note of that before you even start trading, because it's important right now in this environment where you've got obviously the FOMC. So you can see, just again to reiterate, yeah, it's nice having all this stuff moving around you, and I know you're excited and you want to get trading, but you need to take a step back and start thinking about some of these other factors that you might not necessarily see in front of you, might not be so obvious, but nevertheless just as important. 275 basis point hikes. Why? Because inflation has been rampant. What did we just see this week? We saw the inflation number a lot softer than the market was expecting. Flat headline CPI, so we can actually have a look at that here on the calendar, the data. So flat, right? Headline CPI kind of expected, with crude oil selling off so much, gasoline prices coming down. So the market has generally been quite buoyant, okay? And there's another way of looking at that. I've discussed a market profile in the past, which I use heavily, which you can see here. So, the market's been consolidating for quite a while, and we've broken out, we moved out. Why? A lot of this is down to, CPI sentiment. In fact, I would say pretty much all of it. Why? Because the expectation now is maybe the Fed doesn't have to be so aggressive with their interest rate hikes. This may all sound like economics, but it isn't. It's so relevant. I cannot stress the importance enough, because the market is feeling quite buoyant right now and positive, right? So that's number one, sentiment. So again, compare that to what I just talked about there, in terms of the Fed, CPI, and then relating it back to how the market's feeling right now to what you're doing versus compare that. And if it's different, then obviously that's something for you to seriously consider whether you need to be incorporating. The other thing is, how has this impacted market relationships? Our market relationships are very important. Kind of eased you into this in my last video, which I'll show you the link for at the end. You can see here, I think this has been one of the most interesting things this week, is the dollar. The relationship between the dollar and the markets has shifted. Because obviously a weak CPI, right, low inflation, what does that mean? It normally means a weak dollar, okay? Generally, we've been seeing some positive correlation. You know, things like dollar yen, typically when dollar yen goes up, the market goes up, like the S&P 500. Now, the market has continued to go up, but dollar yen and the dollar has actually collapsed. Why? Because of the soft CPI. So you can see this inflation reading is directly impacting, and you can see it here, the correlation has gone negative. Okay, that's not a bad thing. It just means we need to be mindful that now when we see the dollar selling off, actually it's a positive thing, whereas in the past it may have been a negative thing. So you can see why it's so important to keep on top of that, because if you've got it the wrong way around, obviously you're in big trouble. And again, it's something for you to consider, start looking at. So we can see on this particular day, and again, I'm going to do it again just so you can keep your attention. We're going to get into the exciting stuff. I will break down in detail what I was doing, you know, and all of that in terms of the execution. But this is equally as important. So we can see on the day, sort of the landscape from an investor perspective, because, you know, big investors will obviously be looking at different markets. Sorry for my handwriting perspective. Okay, I'm a trader, not an English literature person, so my handwriting is terrible. You can see the sell-off on this day, just this week, the day that I was trading the 11th, the market in terms of the dollar was very, very weak, which gave me another kind of indication positive. Do you see? So sentiment from CPI positive, dollar selling off positive, and actually happening on the day I want to trade. Obviously more important from an intraday perspective. Now we can get into the execution. Okay, so obviously I've built up, as you can see, this long bias. I want to see kind of how we're now doing on an intraday basis, as in now looking at, and I guess this is the third thing that I want you to compare. So let me bring that back, is customer data. Okay, so this is where we start to get a little bit more hands dirty, get into the nitty gritty, the actual customer data. What are other people doing? It still amazes me that people use random stuff on their charts, and I've said it many times, and it's the truth. How else do you want me to say it? You know, I can't put any cherries on this and say it in a nice way. This stuff is complete and utter garbage, because think about it. What is this? It is a business, a market. You know, you're in the marketplace against who? Competitors. You know, if you started a business tomorrow, you don't even know what your competitors are doing. You don't have a business, right? That's the simple fact. So if you're doing this with your random stuff, you know, I don't know, Fibonacci's and trend lines, and it's complete and utter rubbish, okay? Because it doesn't tell you what your competitors are doing. How on earth you're running a trading business without knowing your competitor data or customer data even more important. You know, you can look at it in different ways, competitors, customers, whatever. They're customers of the marketplace, they're competitors of yours, right? So it depends what perspective, but ultimately, you know what I mean. If you don't have the data, what are you doing, really? You're just basically gambling, doing random stuff, okay? So again, compare that to what you're doing. And you see, you're now starting to see why I've titled the video what I have. You're seeing very clear reasons why you might be losing in trading, but I'm actually giving you some actionable steps to stop that, okay? So it's not just me saying, hey, you're a loser. I'm not. I'm saying, okay, you might not be being where you are, but let's get you out of that. So getting back to the point, I had a very positive bias, you saw, right? With the first pieces of analysis I've done. Obviously, I want to buy this marketplace. Before I've even started to think about buying and selling, I've done all that analysis so that when I do start thinking about where to buy and sell, it's already done, right? The hard work is already done. I now need to just kind of have a look what the market is doing, what it's up to, on the day. So I've come into this marketplace. Okay, so what I want you to notice is, I'm just going to take it back a little bit. So the market's kind of consolidating here, right? So you can see it, nice little consolidation. We already said earlier that positionally, from a slightly broader perspective, we are heading upwards out of this balance area. So I'm probably in a good position to be taking some longs anyway, but I don't want to just rush in. Okay, I've seen this little consolidation here. I've waited for the market to kind of push up. So I've seen some buying come into the marketplace. And what I'm actually looking at is the market pulling back into kind of where we've just had this, slight up move here that you see here. So buyers have come in. When the market pulls back into those buying positions, okay, quite logical analysis, not rocket science. If the market jumps from one place and comes back to it, obviously those buyers are going to do what? They're going to defend those positions. So I want to see the reaction here. Now you can also see it in micro detail over here. It depends, what your preference is. Let's actually have a look. Normally we're watching this a lot. Let's actually have a look here. Do something different. And let's watch this together, right? And you'll see me take a live position on my live account. So it is actually real money being put behind this, not just words. So let's have a look. You can see some contracts trading there already, 25 contracts at 38, another 30 you just saw there at 37. But look how much buying comes in ahead of that, okay? And then I take the position. Basically, very few contracts trading on the downside. We saw like 20, 25, but that's being met with aggressive buying, right? So I like to call it lack of participation, a real lack of participation. And then that turns into me taking a position. This all happened very quickly, to be honest. Normally, when I do these trade examples, they do take a little bit of time to play out. So with this, it did happen very, very quickly. So you saw that initial buying come in, which I talked about, all of this here. The market then came back, right? We saw the market come back. It's difficult to see the detail in here because it happened so quickly. I pointed it out before. We came down into these areas and only maybe 15, 20 contracts printed a couple of times on the sell side. But as the buyers came in, you can see it here, much more aggressive. So the amount of participation on the buy side, significantly stronger than the participation on the downside, okay? Hence, I took my first position, and actually, this did happen quite quickly. Obviously, you train yourself to see these things, and I did start to get super aggressive. Now, this trade did play out quite quickly. You'll see me add another position in just a second, because the buying was so super aggressive, right? There just wasn't any interest in selling below this area. Why? Because obviously buyers were defending quite aggressively the bottom of the consolidation, that morning consolidation. So you'll see this play out. It really does start to get aggressive quite quickly. You'll see me add a position. Within a few minutes, I've pretty much banked what I want to on the day. We're going to watch this play out together. So again, you can see very little participation here now that I've cleared the depth of market to the downside. Very little printing here to the downside, right? Can you see? Very little, just almost single digits printing to the downside. But in terms of buyers, you see me there, add another position. See, add another position. It's gonna just pop because if I can see it, everyone else is seeing this. Very little printing to the downside, okay? Like peanuts, really. 10, 20 contracts, if that, nothing. And buyers are really now starting to get confident. You can see it really start to push up. You're going to see it pop. So one thing I just want to highlight, if I can catch it in time, because it was so quick. And this is another thing, right? So we've talked about sentiment. I'll just put S here. Number 2 was kind of the landscape in terms of investor landscape correlation. Number 3 is execution. Number 4, something you need to be thinking about is vulnerable areas. Okay, so again, compare this to what you're currently doing. Are you thinking about potential vulnerable areas? If people have got short here, probably they've got stops here. Probably they've got stops here. Those are vulnerable areas. So obviously I want to be targeting those. I'm not going to take profit until I actually see those areas, right? These vulnerable areas. Are you doing the same thing? How do you prove it to yourself? Well, let's see the reaction. As the market, I believe it did pop quite hard in this area. It happened to be the open of the regular trading hour session. That's why there's a lot of people who had stop losses around there. You won't see this on your, obviously, your retail chart. No reason why you can't have access to this, which I've mentioned many times before. You're going to see it just pop here. And that's where I take profits, or quite a big bulk of them anyway. We're just going to watch this play out. Let's just give it a few seconds, all right, rather than me fast forwarding it, because you're going to see it. Just watch. I believe it does pop quite strongly as it just goes past this area. Okay, market's quite itching to pop. There you go. Did you see that? It just popped. Literally just popped. Okay, so I'm just going to rewind it and I'll show you again. I want you to watch very closely as it just pops. Virtually zero selling. There you go. Did you see it? Just like flash of an eye, it just popped. And that's where I took profits. Basically just going through there, a lot of stops in that area. Zero contracts printed on the sell side. Basically nothing came through on the depth of market. And then finally you see some selling, probably people like me taking some profits on that side. So that's pretty much most of the position. You can tell here I'm up about 700 at the minute. I've banked around 2/3 of my position. I'm now going to fast forward it and just show you how it quickly played out. Because obviously the last bit was a little bit slow because there was a little bit of a battle there, which I just fast forwarded into. So there was actually quite a bit of a battle taking place here between buyers and sellers. And essentially I just took my last position out because it looked like there was a little bit of a stumbling block around there. Obviously, I don't know what's going to happen. Will it go further? Will it not? Once it had kind of tested that area. Very low risk trade. Didn't want to look a gift horse in the mouth. The trade took what? No more than a few minutes, right? So you're going to see, in fact, I did actually have one more contract on, and I'm going to show you how long this battle played out for ages. And that is why, there you go. So I finally took the final piece off there. So for a total of 562 on the day. Okay, so that was the final position. Those were the initial positions. Apologies, I thought I'd actually taken off 2/3. It was just the first one. So what I did, I took first one off there. I think the second one I was actually targeting a little bit higher, but as I saw some selling coming in, a bit of consolidation starting to build in this area, I took it off. And in the end, to be fair, even though selling did come in quite aggressively, the buyers eventually did win out. And that's the final point I want to make, which is kind of on the psychology. People talk a lot about psychology as step 1. For me, it's really step 5. The final thing you want to look at. Yes, I'm going to show you the market did actually go a little bit further and popped again. There you go. Okay, so it went a little bit higher than what I'd expected, but I was happy with that. So it's accepting the outcome is my point. Because knowing, if you do this day in, day out, eventually all of these gains do start to add up into a nice equity curve. Okay, so don't worry too much if the market goes further than you expected to, because look, you can see it here, right? People talk about this as a psychology thing. I think you should actually think about it as a market thing, right? We're trading the markets, and that's why it's important to relate your decisions to what's going on in the marketplace. And that's why it's important to have access to customer data, because you can look back when you review the trade and say, well, you know what? There was aggressive selling coming in where I took my final position off. I did the right thing. I didn't know that those sellers would eventually lose out. Could easily have pushed through. The selling could have pushed through. And then what? I would have been sitting on some losses on that final position. So, you know, as long as it's not a case of, well, just buying, and you just exit for no reason. Has to be a reason to exit. There was sellers came through. So hopefully you can see how wildly different what institutional traders are looking at is to what I see on pretty much 99% of videos on social media. Anyone can do it, you just need to keep developing your knowledge of what the very best institutions in the world are doing. Now to continue doing that, watch this video here where I show you more high-level institutional tactics to trade the markets.